Hello traders, welcome to ChrisFX. Today I'm going to talk about how to identify daily bias, and this is based on a video by TTrades. I will be leaving the link to his channel and his video down in the description, but I will try to also simplify it in case that you haven't watched his video. Here I am on Nasdaq on the daily time frame, and I'm gonna be using only the daily candlesticks in order to identify my bias. And starting from here, what do I see? I see that we have broken with a body of a candlestick above the high of the previous candlestick. When this happens, you will expect to see another bullish candlestick because of the fact that we broke above a high with a full body. An additional confirmation will be this swing high right here. This can act as a draw on liquidity, but I will make an additional video on draw on liquidity. So we expect this high right here to be taken with the next candlestick. Let's see. Here we see that we took this previous high. What did we do? We broke with a body not only above the high of this candlestick, but also above liquidity. If we would have broken with a wick only above liquidity, I would be expecting lower prices. For the moment, I expect this high to be taken. This is not always going to work, but it will work most of the times. And here we go, we break above a high, but what do we see? We see that we are unable to close with the body of a candlestick either below this low or above this high. So what I will be expecting in this occasion, I will be expecting this low now to be taken. Let's see, and this low is taken, but we are unable to break with a body either above or below. So in this occasion, I cannot know what is going to happen. I will be waiting for the next candlestick. And there we go, the next candlestick grabbed this low. And since we did not respect the body of the order block right here, and we didn't leave a wick, I will be expecting the low of this daily candlestick to be taken. Let's see. And the low of the candlestick has been taken. Nonetheless, we are not able to close above this high right here. I will be waiting to see what the next candlestick is going to bring to us. And this is an important thing. If you are trading based on daily bias, which I'm not doing because I have a very robust strategy on indices, you can join my trading signals or the one-on-one mentoring, and I can teach you all about that, where we're looking only at the 15-minute time frame and 1-minute time frame. But I have gone ahead and I have implemented this thing right here, but on the 15-minute time frame instead of the daily. But if you're trading based on the daily bias, then for sure in this occasion it would be nice to wait and see what the next candlestick is gonna do, because we don't know what it's gonna do. So now what we do right here, we break with a body above this candlestick right here. So theoretically we would be looking for this high to be taken. Nonetheless, we also broke above a swing high and we were unable to close with a body above the swing high. So you have to look at both of these things at the very same time. So in this occasion now I have a bias towards the downside only because we grabbed liquidity above this previous swing high and we were unable to close with a full body above it. Here we have a situation where I was wrong, but what do we expect now that we broke above a high? We will be expecting this high to be taken right here, and this high is taken and we close with a body. So since we close with a body, what I'm expecting, I am expecting this high to be taken. This high is taken and we still close with the body of a candlestick. So what will I be expecting? This high to be taken again. So let's see. This high is taken and we close with a full body. So I'm still expecting for this high to be taken. Here, by the way, this high is taken, but we are unable to close above this high with a body of a candlestick. So now I will be looking to see this low being taken. In this occasion that I don't have an immediate area to my left, I would scroll back and I would check out previous highs, let's say in this occasion, and I can see clearly that we have taken this high, which is an additional confirmation that we will be going lower, even though this belongs to another video. Actually, that we will be taking the low of this daily candlestick. we are taking the low of this daily candlestick, and at the very same time we close with the body below it. Since we do it, I'm expecting the low to be taken again, and we take the low, but we are unable to close with the body. So in this occasion I will be expecting for the high to be taken, and here I was wrong. As you can see, we take the low of this candlestick and we break with a body below this low right here. So I will be expecting an additional break below this low right here, this low to be taken, and this low is taken, and then we retrace towards the upside. Now in the next video I will talk about draw on liquidity, but this is not the point of this video right here, because we see that we have a fair value gap exactly right here, the one that I pinpointed. Here we are unable, as I said, to break with a body below this low, but we grabbed liquidity. Theoretically, I'm expecting the high to be taken in this occasion, but of course in the next video we can implement draw on liquidity. This high is not taken, as you can see, and we are within this range right now. So what I will be doing in this occasion, I will not be making any predictions until we break below this area. And now if we implement a little bit of draw on liquidity, we are within this FVG right here. So theoretically, if I wouldn't be inside this FVG, I would be expecting the low to be taken, okay? But now we are in this FVG, so I will not be doing anything. Since we respected this FVG, as you can see, and now we broke with a body above this candlestick, I will be expecting the high to be taken. Okay, the high is not taken, so this day I will not be expecting anything to happen until we leave this range right here. Okay, so we break above the high with a body, so now I'm expecting this high to be taken, and a little bit spoiler, this is a draw on liquidity up here as well. The high is taken, but we are unable to close with a full body, so for the moment it is possible that we take this low. We are arranging again, so in this occasion I will not be doing anything. We take both the highs and the lows, but we are unable to grab this one. I will be waiting still. Here we do break with a body, but you have to be super cautious in these occasions. I will talk about, as I said, the draw on liquidity. This is the remaining part of the FVG, and we totally respect it. So I will be waiting in this occasion. If I would judge only by the candlesticks, I would expect the low to be taken right here. Now I will be expecting the high to be taken. Here we do not take the high or the low, so now I will not be predicting anything until we see something happening. Here we take the low of this candlestick and we leave a wick, so theoretically we are respecting this order block, even though those belong to another video. Now I will be expecting the high to be taken. The high is taken and we break with the body of a candlestick. I will be expecting this high to be taken. The high is taken and we break with a body, plus the little spoiler, we also break above those swing highs that you see right here, and we close with a body. We do not respect them, so I expect this high to be taken. And this high is taken, and we close with a body. I expect this high to be taken. This high is taken, but we close with a wick. Okay, I will be looking in this occasion to the left to see if I grab liquidity above a previous swing high, and here I do have a swing high. I will zoom in, you see it right here, and I will be extending that all the way to the right. And now that I have broken with a wick and we are unable to respect it, I will be looking for the low to be taken. This doesn't happen in this occasion, but we are unable to close either above the high or the low of this candlestick. Let's see what's happening. I will not be predicting for the next day. Now we do take a high, so I will be expecting the high to be taken in this occasion. And the high is taken. I will now scroll to the left once again. I haven't broken an area of liquidity yet, but if I am to judge only from the candlesticks, I will be expecting the low to be taken. And there you go, we take the low right here, and so on and so forth. So you pretty much understand now how to identify daily bias. More or less, if we break with a full body, you can expect the next day. So if we break with a bullish, let's say, candlestick above a previous high, you can expect the next day to take the previous high as well. And when we break with a full body below a previous low, such as in this occasion, you can expect the next day to take this previous day's low in this occasion. And of course, there are things such as draw on liquidity and very significant areas such as order blocks or FVGs, which might be respected, and I will be making another video on those. So if you liked this video, go ahead and leave me a like and subscribe to my YouTube channel for more free educational content. Furthermore, you are always welcome to book an one-on-one mentoring with me and ask me whatever you want, and I can teach you, of course, my phenomenal trading strategies and tricks, or you can also join the amazing trading signals that I have. And furthermore, go and watch the original video also by TTrades. He's doing an amazing job explaining all of that stuff. I will be leaving the link down in the description. This is gonna do it for today, traders, and thank you all for watching. Until next time.